Welcome to the Techno Fundamental Report for July the 20th. Opportunity ahead. You know, there's $5 trillion of cash sitting on the sidelines. If that money starts to come into the equity markets, this could be really a nice bull market. We do believe that a new bull market has begun, and we're seeing uptrends. That's the main point. In a bear market, you just cannot make any money. In a bull market, you have to make money so that when the next inevitable bear market comes, you have a cushion built up. Now, Jesse Livermore said, money is made by sitting, not trading. Now, let's define an uptrend. We have a low, a higher high, a higher low, higher high, higher low. So what Livermore is trying to point out is that once you get into that uptrend, you want to reduce your turnover as much as possible. You're still going to have turnover, but it should not be as dramatic as in a bear market, because in a bear market, your turnover is pretty high. Wisdom is knowing what you don't know. Now, we don't know what this particular graph, which, by the way, is the S&P 500 above the 200-day. 200-day has turned up. This looks like an uptrend. Here's NASDAQ, 200-day moving up in an uptrend. We just don't know what's going to happen out here. It could come here or it could come here. You have to take it a day at a time. But knowing what you don't know is so important. You have to accept that fact. Now, I did want to mention something called pump and dump. We're seeing this in the marketplace. It's just kind of a heads-up thing. Low-price stocks that have very little volume are subject to manipulation, and we see it out there simply because of social networking. You're seeing these chat rooms pop up where you get these characters in there pushing a stock, and then they push it up and then they dump it. We're seeing that. Now, you might want to pause your video player. I'm not going to read this, but it's pump and dump is an illegal scheme to boost a stock's or security price based on false, misleading, or greatly exaggerated statements. We're seeing this in the market. We have friends that are experiencing this. That's why I'm bringing it to your attention. Now, I did want to point out a new indicator that we haven't used in a long time. My friends at Copic Research have pointed this out to me. Now, it has to do with time, and it has to do with new highs on the NASDAQ. And the time factor is 18 months. It seems like the human behavior, which, by the way, human behavior is the best way to look at this, because human behavior does not change. Throughout the centuries, it doesn't change. But what we're looking at here is over a period of time of 18 months, is the NASDAQ hitting new highs, hitting the highest level in 18 months. So number one, it has to be the highest level in 18 months, and there could not have been something prior in the prior 18 months. So this is exactly 18 months. So it's basically saying that the market is getting a lot of new highs in here on the NASDAQ. When this particular indicator has given the indication, usually the following 9 months, 12 months is up about 17% plus. So it's an interesting indicator. The other point I want to make, this is the small cap advanced decline line. So small cap is what we would refer to as risk on. People are willing to take risk. Well, you can see here on the advanced decline line, we have broken through this downtrend and moving up nicely. So that's a very positive sign. New highs minus new lows on the NASDAQ continue to look very positive. No problem there. Now, I did want to mention one negative, and that's interest rates. Interest rates have been creeping up. This is our power index. We've now got a positive reading of 15.7, which, you know, kind of tells us that rates have been climbing. So just the only concern we have is that interest rates have popped up, but you can see here they popped up. Now they're kind of trending off. So we expect this indicator to go back down, but we'll have to just wait and see. Now, on the Copic Curve, I did want to mention the Copic Curve. We're getting very, very close to a plus reading from a minus reading. As I've noted in the past, we usually see the Copic Curve come above zero. The bottom of the market is in. From being below zero to above zero, the bottom is in. Now, the point is that every time it has turned up, now this is only given 3 readings since 1990, so this will be the 4th reading in quite a while if it breaks above 0. But if you notice here, once it turns up, it tends to break above 0. So the momentum, according to the Copic Curve, we're starting to see some momentum to the upside. The Copic Curve is interesting because it also takes into account human behavior. The aggression index is absolutely moving up almost in a parabolic fashion. You can see what happened here back in 2020. Now, that was a really good year for growth stocks in that year. So growth stocks are outperforming, which is definitely a good sign. Our 3 economic indicators, like I pointed out, interest rates have pulled back somewhat, holding that 200-day moving average. Price of oil has been getting back into somewhat of an uptrend, still below that 200-day moving average. However, the really good news here is the financial stocks are starting to show some real strong life here. So we're kind of the opinion that the banking issues are behind us. Now, this is the new lows on the New York Stock Exchange. We always want to see an extended period of time below 40 a day, and we're getting that. So that indicator is on a positive as well. This particular fund, this is the Renaissance IPO fund. I've talked about this many times in the past. Very nice uptrend going here, broke out to a new high. Again, this is risk on. This is the growthiest ETF that I can find that has in it the stocks that have gone public within the last 2 to 3 years. Now, I did mention the banks. I did want to point out that the regional bank index, if we look at our trend meter up here, we've moved from pink to yellow. Now we're in green. So, and then if you look at the graph itself of the KRE, which is the regional banking stocks, you can see that really starting to develop somewhat of a nice uptrend here. So the good news is it looks like the banks are kind of getting back on track. The market looks bullish. Let me know if you have any questions. Thank you very much.